Okay, well, welcome to our daily market review and analysis. It's Friday evening after the market close. Today we'll be looking at the US dollar pairs in particular and a few other charts of interest. So we'll start off with Dow Jones Industrial. Not a lot to add since we last looked at this Dow Jones Industrial. From where you've seen my vertical line, we counted that to be an intermediate wave 3, and then we had a retracement wave 4, and we are currently now finalizing what appears to be a 5-wave move to the upside in this fairly short-term uptrending channel. And once we complete that, what it will do, I think, is it will produce this 1 and 2 and possibly 3. Then we will get a retracement 4 of a larger degree, and then if you look at the RSI, so we have a wave 3. So I think what we got is from the low here, which is back in November, we had a wave 1 in bracket, wave 2 in bracket, and I think this one here, this little triangle kind of ending pattern, that's the top of wave 3. Then we had a retracement wave 4, and we're trying to finalize this wave 5, and in process of doing that we have already gone above the 2000 and was it 7 or 2008. See, we've already gone, that was in 2007 high. So I mean, we haven't gone a massive amount, but on a daily chart, if you look at it, we do have now today's close is actually above that. Yesterday it was almost on the border, but today's close is definitely above the 2007 high. So a couple of things could be deduced from this, is that if we have closed above the 2007 high, and yet within this sequence here, what we need to do is we have a minor 1, minor 2, minor 3, we'll get a retracement minor 4, and then another 5. So at the moment, I think we will continue grinding higher, and we will probably, actually for the rest of the next week, there could be few days where we get a weakness like we've had over here, because at the moment we're only expecting a minor weakness, and that minor weakness might actually only be so that it sort of comes back and retest the 2007 high, and then produce this 5th leg up. So, and the 5th leg is almost complete. This wave 3 is almost complete. So we got very small 1, very small 2, and then this here somewhere is 3, 4, and then we're almost in the final one. So maybe I think early next week we should see some weakness in the equity market, even if it is just for a couple of days, because this one here, for example, a 4-hour bar, we've had about 5 or 6 4-hour bars, about over a couple of days, couple of trading days, where we've made that small retracement. So here we could probably do 2-3 days retracement. If it doesn't happen right away on Monday, then maybe perhaps say Tuesday, Wednesday we might see a pullback. And of course, at the moment, the way the market is, as you know, sometimes we get a very wild swings, i.e. you could certainly have gap down open, sell off heavy, and then toward the end of the day almost recovers and close positive. So we could get a couple of days like that. That would probably produce this minor retracement, and then we'll continue higher. But overall, on balance, I think next week is going to be most likely positive. I suspect that by end of the week we will be closing higher compared with where we are today, and that would mean either we just continue higher or we make this partial retracement and then move higher. So generally speaking, equity market will probably still be positive. We've had a substantial rise a couple of days, so yesterday and today there's been only minor improvement, but still closed high on the week. If you look at the oil, Then on the daily chart of the oil is also looking like it is bouncing up. We've had like now nearly 3 days of minor improvement on the oil price. RSI you can see is only just bumping up on a 30. So on this retracement on daily chart, we expect RSI probably come back to about 50 and then make a second leg down, and that would coincide with maybe price coming to 50% retracement of this decline, probably in the region of about 93.75, maybe even up to 94.50 area, and then possibly have a second leg down. So for a few days next week, I think there is a positive action both from oil and equity. And whilst we continue to look at these, we would normally assume there is an inverse relationship between equity and dollar index and between oil and dollar index, purely because they are denominated in dollars. However, in the recent time, we've had a situation where prices actually don't do what their normal relationship dictates. So sometimes we've had a situation where prices have gone up on equities, and likewise at the same time we've had a dollar also go up. So there have been some mixed days like that. Oh, and there was another one chart I wanted to show you. This one here is the Nasdaq 100, and that chart you can see has closed with a pin bar, and that one seemed to suggest there's a minor 5 wave on this last leg is up, and is possibly developing what we think is the rising wedge pattern. And if that is the correct interpretation, then maybe for the Nasdaq 100 we've already got wave 1, wave 2, wave 3, wave 4, and this last one is wave 5. And wave 5 interestingly today closed with a potentially a selling bar. I'm not saying that that is going to be it, but look, you can see it still closed higher than the close of yesterday, only by a fraction, but it went all the way up and it gave up most of its gain for the day, and it basically closed back within that range of the last couple of days. So Nasdaq 100 still appears as though it appears as though it's weak, and maybe we might get a selling. So that means possibly from a Dow Jones, as I'm saying, it's near enough complete. So it's quite possible that maybe early part of the week we might see a sell-off, and then maybe later part of the week we'll see general recovery. Okay, so and then Nasdaq 100 might have a sell-off which might be a little bit longer, because Nasdaq 100 generally speaking is classed as a slightly higher risk. So if the market corrects, then that means people are willing or are looking at taking the money off the higher risk market and maybe recycle that back into the more stable market, or market which doesn't seem to be interpreted carrying same degree of risk. So maybe the Nasdaq 100 is weak from that point of view, whereas the Dow Jones is still relatively strong. If we do S&P 500, then S&P 500 is almost also completing this fifth wave. So we've got 1, 2, 3, 4 and 5, and in this fifth wave, if we look at it in smaller time scale, so we just identify where it starts. So it starts from here, then if we look at it from there, so it starts from there, for example, and this could be 1, 2 and then 3, which is 1, 2, 3, 4 and 5, 3. So this one's got a bit more room, just like the Dow Jones Industrial. So we've got in here possible, so this one 1, 2, 3, 4 and 5 will complete 3, get a small retracement, and then possibly another leg up higher to complete that. And we may on this occasion be looking for that completing somewhere in the region of 15,000, or sorry, 1,550 approximately, before we would experience a correction on that one of a larger degree, and that correction we're looking for overall could be, you see, been rising up there. We've now shot over the upper parallel line, so that could be a topping pattern potentially, and we could well be looking for soon a fairly reasonable sell-off. If we've had a parallel line at the top which contain all the tops in there, and then recently we've shot up, so the two things could happen. Either it could race up, now apparently it would think there's no immediate resistance, it would race up, or it could prove as a false break. But see where 2007 is, it is so close. So whereas Dow Jones already overtaken it, S&P 500 is just fractionally below that. So my suspicion is that we will probably, I don't think we will get a major sell-off before we've actually taken that 2007 high. It will be so, there will be a lot of people who might have already been shorting this market, and they've got to stop just above. So I think the market will push that to actually trigger the stops, and because on a larger account they don't necessarily have stops just few pips away, as it were, over the 2007 high. So you might actually see a fair bit of run, not in terms of hundreds of points, but certainly enough margin to possibly trigger some stops lying up there. So we could even find, if we were looking for a round number, maybe 1600, but if not, then possibly 1550 I think is fairly given, which is over here, 1550. That would mean we'll be just fractionally less. But if we actually challenge this and go above, then we are looking for maybe 15, I'd say 1600, 1600 approximately, where we would have this minor 5 wave up, starting from this low here in November, is a 1, 2, 3, 4 and 5, and this one is finalizing fairly soon. It might extend a little bit to actually give us slightly longer waves, and therefore the same thing would be expected of the Dow Jones. So I think broadly speaking, the major sell-off probably won't happen yet, although it's imminent. It is close. It's not like months and months away. That major sell-off will be in the context of where we are. So I'm not expecting, for example, that major sell-off to sort of start going all the way back to this sort of level, but we would make some retracement, and we would have a first sell-off. This is an area where we could expect a potential support, maybe the next level here as a potential support. So maybe that sort of a retracement, and then equities, I suspect for the time being, will continue higher. I will be doing some background analysis of longer term time frames, and try and ascertain just exactly what level of sell-off we might expect, not necessarily get, because that would be difficult, but we could make provisional analysis and anticipate where we think the sell-off is going to be. But I think major sell-off probably will not be happening, and to some extent that depends on the dollar index confirming the top which we've been looking for a while is actually complete, or is very close to being completed, and that would mean that even if we have a sell-off on here, it will be relatively mild and not necessarily major sell-off that would trigger something like the sell-off we had back in 2007 to 2008. Okay, so we'll go over the dollar index, and in the yesterday's video we were looking at either top already in there or very, very close, and now we know that we've been following this pattern where we got a 5-wave pattern to complete. So when I'm looking at that on a 4-hour chart, then there are a couple of different things here that I'm not absolutely certain, but based on RSI is we've been getting degrees of divergences being developed on RSI on almost every succeeding higher highs, and each time you seem to come back to 50, he bounces and he doesn't get back to the previous high, so he turned back, and again we are ready to turn over. Now if I look at that, this is on a 4 hour, remember, so if I look at that, I am fairly comfortable in labeling this as 1 and this one here as a 2. And then what we were saying possibly is that, you know, we've got not a very clean pattern, you know, by any means, but what we probably have is few things, either this one 1 and this one 2, and then all of this here up to 3, so we go 1 2 3 4 and 5 to give us 3, and then we've had a wave 4. So I think what I'm now looking for really is our original count. And I know you might say, well, why you keep changing it, but in reality, I think the top is in, even if we don't put the wave counts in. It's got several degrees of Fibonacci retracements and confluences of projections, so those things are telling me, and also this declining trend line coming in, plus the fact that on RSI we're getting degrees of divergences, and potentially now you see over here on this move we sort of went over the 70 limit but couldn't hold on for too long, so we fell back. We tried a second attempt to go above and we really failed. We've come back and now we're refusing to go even up to 70, and we've almost got double top on the RSI. So if we get on this 4 hour, if we get any decline, then RSI will turn over, and it's already beginning to curl over. So looking at that, I think this is one, and based on the RSI I'm still thinking, and it's only very marginal. See, this is a low, so that's why I put this wave 2 here. So if we were to stick with that, then this could be wave 1, this is 2, and then maybe one this is 2, 1 2. I think the only sense I'm making is this one here. This one is the only way we are counting it clean, 1 and 2, and then in a wave 3 we got 1 2 3 4 and 5, or this one being 5, 1 2 3 4 and 5, 3, and then if this became 4, then we have 1 2 3 4 and 5. This area here is, I think, some kind of a flat correction, so make that one change the color. Oh, too dark. Okay, so we've got 1 here. So looking at the RSI, see, up to here is 1, ABC retracements wave 2. Then if we say wave 3, then wave 3 would finish starting from here. Wave 3 would finish 1 2 1 2 wave 3 would finish here. It's 1 2 1 2, wave 3 ABC down, so wave 3 finishes here, then you get 4, and then you get 5 wave 4, and then you get 5. So possibly 1 2, and then 3 4 and 5, so that completes wave 3. This is 4, and then on the way up we've got 1 2 1 2 3 4 5, 1 A, B, C down as 2, if this is 3, then I think we've got a bit more upside left. So this one here is wave 3, then this is 4, and we are now completing this wave 5. So let me just see if that is now correct. Is it 1 2 3 4 5 3. Yeah, I think this is the only place where I'm getting fairly clear count from. So I'm going to, for the time being, I'm going to assume this is 1, this is 2, and then go 1 2, this one up to here is 3, 4 and 5. So that gives us wave 3 in a larger degree. ABC returns wave 4, and this is 5, and this 5 may well be over, because if I now look at this from here, is you go 1 2 3 4 5. So I think maybe a small upside left, or we might get some more new revelation, i.e., some more price data will actually help us confirm. But I don't really think that dollar index have lot of room to the upside left. I think we are very, very close. If you look at the decline from July to September, then we're coming into now 78% retracement, so that's one. Then we've also got some projections from the bottom here. This one is too small, so I'll take that one off. But see, if we were to put this one here, like there, one, see if I make that one 2, okay, so we go to 200% reverse extension of that one, and then this one 127. So I'll change that to 1.618. So 161% coming into there. So you can see we're coming into an area where there is a fair bit of confluence, and also more importantly is that we've got now definite divergence on the daily chart. So if we get a price now even marginally higher high on a daily, we definitely have very clear identifiable divergence forming, and on a 4-hour we obviously got divergence, there's no doubt about that. So I think it is possible that we are very, very close to a top on the dollar index. If you see even the way it's rising, is we had a relatively strong leg up and down, and then even up here it's not been too bad, in the sense we got a staircasing up, and then from here you can see is going up, but every so it's much shorter thrust up and then retraces, a shorter thrust up and retraces. Here retracement is deeper. See over here, if you look at it, this is a fairly shallow retracement. This one is almost more than 50%. This one here is almost more than 50%, and in fact we had like a flat correction, and then we are now, I think this could well be the final leg up. In that final leg up, one wouldn't be able to completely rule out that here, like we had a minor 5 waves in this one, we've got a minor 5 wave, but that minor 5 wave is very small, very small. 1 2 3 4 5, so it's very small in respect of overall. There is nothing wrong with that, but it looks disproportionate. So we might get another complex little rally and basically take us all the way to like 83 or so. I can't really think of this one going much higher than this, but whilst they remain in that trend channel up, we have to assume that there are still some outstanding waves left, because here we've been struggling to try and actually put a complete waves on clearly. We're okay here, 1, and this is 2. Then if we do this one, then really speaking, you get 1 2 3 4 and 5, so that becomes a wave 3. This becomes a 4. You see, what we might be having is, if I label them like I've done them here, then we've got this one here as 1, this one as minor 2, this here is a proper 2, 1 and 2, minor 1 2 3, this as 4, and then we've got like so 3 and 4, so this one becomes this wave 3, and then this one becomes wave 4, and then what we have is this as 1, ABC as a 2, so I'm going to label that now. I think we're getting there now. So this could be 1, and then ABC here is a flat, so we've got 2, and therefore this, what we are looking for, is a 3. So once that 3 is finished somewhere over here, we'll get another pullback, and then we will get another leg higher like that, and that would then complete the count. So we've got in this 5th leg, we've got 1 ABC retracement, 2, this being 3, a small retracement 4, and then 5. And then if you look at the symmetry, then this is wave 1, so we are going to expect wave 3 to be something like that. So we will probably find that in this wave 3 we're going to have somewhere around 83, a small pullback, and then another leg up, and that could probably form like 83, 83.50, and we may then be completing altogether. And then you'll see a definite divergence on the daily, very clear. On this one will continue to form this declining, potentially declining peaks on the RSI. So if the dollar index hasn't topped, we're still looking for potential top to materialize fairly soon. So we've already come to close to 82.75, a retracement, and then another leg up will probably do it, and that could be around 83.25, 83.50 area as a general area where I'm expecting a potential top to form. So we'll look out for a top next week in dollar index, I think. And if it continues to grind higher and actually get an extension, then we are looking for almost like 100% of this retracement, and maybe even a little bit higher. And in terms of a longer term picture, I think I don't have all labels on this one, so let me see the other chart it's got a label on. No. In terms of the bigger picture, during this decline we've been looking at this one as potentially wave 3 in this decline here, which we won't be able to see on this chart, but we'll be able to see this as a wave 3, this as currently wave 4, and we'll be coming down to produce this wave 5, I think. So in that particular context, we are looking for this as a wave 3, then you've got wave A, B and C, sorry, wave A, and then A, B and C as a wave B, and this is producing wave C. So what we might have, if we do get an extension, then what we might have is, if you call this one a capital A, say, and then this one as a capital B, then in essence we are trying to form this capital C to the upside, and that would then complete the entire correction. So we've got capital A, then A, B, C down to the wave B, and we are going up, and it will become shorter. So in that particular case, we've probably got this one here as A, B and C as wave A, come down for A, B and C as wave B, and we are now looking to go back up, or we might have this as a wave X. So we've got a leading diagonal wave A, B and C, wave X, and A, B and C. Okay, and that C then, in that case, you can see this downtrend line coming in. We may even then actually go and hit the higher end of that. So that is also possible if we get an extension on this current 5-wave sequence to the upside, and if we have not given this wave 3 adequate room, then we may finish up with a situation where we've got wave 3 finishing over here, and then this is A, B and C as wave 4, and we get a wave 5, and wave 5 will have a 5 sequences up. So like one nearly done, small retracement, then we get another leg up, down, and then another leg up. Now if that happens, then you would expect a major sell-off, significant sell-off on the equities. You cannot have a dollar index rising this strongly and equity market also continuing to rise, because if they do, that is something very, very strange. It's not normal. And this pattern we are talking about is still valid. The overall construction is still valid, except that this wave going up might turn out to be much longer than we anticipated. Now there is another guidelines that suggests that that wave cannot be, this wave C cannot be 150%, I think, extension of this one. So if I was to put that extension on 150%, so let me see if I can do that. We need to do it this way. Change the color of that one to deep blue. So the guidelines suggest that 127 now and 26. So I'm going to put 1.5 here. See where that comes into. 150%. Yeah, see 150% comes in at this area. So I honestly think, we do have a potential of top being formed in that region there, where I put a red line, because that means it's a 78% retracement of this decline. We've got few of the Fibonacci lining up, we've got the downtrend line coming in, and we've also got potential divergence on the RSI on daily and also the lower time frame, and we have almost most of the waves complete. So I think initially I think we are going to leave this one looking for potential top to 83, and 83.25 or something like that as a maximum. I don't think we are likely to go all the way to take out this high, but we will review this and see how things are developing. For the time being, you can see if we put this trend line on, then we will start failing that trend line soon. What will happen is as the price loses momentum, you get more sideway action and less upthrust, so eventually you start falling out. So I suspect that we will probably get this next week market dollar index topping, and then ideal situation would be is that once the dollar index tops here, dollar index makes a significant sell-off, and that would thrust the equities quite high above the 2007 high in some of those indexes, and then dollar index will in decline. It will do wave 1, and then it will go back up, retracement wave 2. That wave 2 can be fairly deep, almost making it look like it's in an uptrend. So it could go back to like 8250 area, for example, and during that time equities could really sell off, but only sell off within the context of what we're expecting. We're not expecting a major bear market sell off. We're only expecting general retracement in broad uptrending market. Okay, so I think we've done enough on the dollar index. I think we are looking for a potential top around 83.25 or thereabout, and then we should be looking for a decline on that. Okay, but we'll review it next week and see how it is performing there. Okay, and then we'll go on to the other dollar pairs. So the first one we're looking at is USD Swissy. Now based on the USD Swissy, if you look at the same decline from July high to not necessarily September, but in January we made a low. So if you make a retracement on that one, then we have already done 50%. 61.8% is not too far away. If I was to put in the 78%, and within a short space of time of each other, we will see all these. Not necessarily everyone will do the same degree of retracement, but all of them will start performing similarly, a sign of weakness and top being formed, within a fairly short proximity of each other. It might not be exactly the same hour, but generally speaking fairly close. Sometimes if you have a bit of chance, we'll look at another chart where we've seen one particular index or a currency tops and the other one probably does a day or two afterward, but otherwise in the same sort of a time frame overall. So looking at this one, there's no evidence of any major diversion, but on the daily it's got similar diversion but lesser extent as what we are seeing on the dollar index. You can see just about here. So if we get another minor higher high on the price and then the RSI fails to keep up, then on the next decline we'll find RSI fall below this minor rising trend channel. So based on this one, I think this has an opportunity of going up to this level, which is approximately 96 or marginally higher, 0.9612. So if we make that a whole number, then 0.96 or 961, where we are likely to form a possible top, and this minor trend channel rising up is currently supporting that, and Swissy has been relatively weak, so it doesn't have the same structure as we see on the dollar index. That's why currently the price is almost thrusting out of the rising trend channel. But I think we have a Fibonacci retracement and one or two Fibonacci projections coming into that area with associated potential divergence, early stage of divergence on daily. I suspect that we will form a top in dollar Swissy by the time the dollar is topped, probably at 96 area, 96.1. And then of course when that turns, we are looking for a major resumption of the downtrend, which would come to retest this low as an initial intermediate target, and then continuing to make a lower low, lower high on these daily chart swings. So that's dollar Swissy, Aussie dollar. Now, just like the dollar Swissy, Aussie dollar is quite a bit confusing actually. It starts off not too bad, but then it becomes very confusing. Overall, just so that we remember, we've had a very significant low here back in 2001 or 2000. Then we've gone up in what looks like wave A, B and C, and I think that we can label it as a wave A in bracket, the ABC retracement, wave B in bracket. Then we have a couple of things going here. Either we have this one as a 5-wave move up, so we get 1, 2, 3, 4 and 5. I am less impressed with that, but it could be one possible view, because when you start looking at this last one here, for example, you see you get a very small retracement, and then this last leg up actually has ABC rather than a 5-wave up, unless in a very small time scale it is actually hidden in there and it looks like ABC but it's actually 5-wave in there. But nevertheless, we've had a capital A, capital B, and then we could be doing capital C, and if that's the case, then all of this could be wave A with these 5 waves in them. Then we can see A, B and C, some kind of a triangle, and then eventually we would break out like we've always said, or what everybody's expecting. Okay, the alternate view that I am looking at is this, is that if you look at this on a monthly chart, then we've got this A, B and C, and just like this one got A, B, C zigzag, I think this one to me looks more like that. If I look at this one to me looks more like A, B and C personally, even if it means that this is A, B and C as a wave A, so we get now A, B and C for wave B down. So my alternative view is that this leg is finished, we've got a retracement coming, and in that retracement we have a wave A in double bracket, for example. Then all of this triangle is a part of wave B, because if you look at that triangle and says included from here, it doesn't look, you see, from here it looks like it should be done, so then what is this here? And I'm not entirely too sure. So I think it is more likely that we've got this wave B is actually part of this area here. So we've got wave A, then going up this way is we've got A, B and C in that particular manner. Okay, so if we're doing that as a C, then we get wave A in double bracket, wave B in double bracket, and then we should be expecting a wave C to the downside. So that leg C would probably retrace some of this here, and we could have a deeper retracement like 50%, for example. That would bring us to 0.85. So that's the alternate. So if I'm looking at it overall, then we've had a in this here we've got a flat correction. So we've A down in double bracket, then we've got A, B and C, so it's almost a flat correction. So we get wave A and wave B in double bracket, and we should be seeing 5-wave down. So that's my personal preference, and if that happened, that means the Aussie is going to be very, very weak. But if not, then we've got this 5-wave down here as a potential A. We are in the process of correcting a little bit to get wave B, and we'll get a second leg down, and then that would produce a triangle, which would give us a view that the Aussie dollar is going to come back to this rising trend line, and then basically that triangle will be finished and will actually be going up like we've expected in the past. So Aussie dollar, I think, is not very clear, and similarly we'll find that Aussie pairs some of them, not all, but some of them will be less clear in exactly the same way. So I am expecting actually a deeper retracement, but we'll have to also remember that we could have a triangle and it might not come down that deep, it will probably go up. So for the time being, I think I would not be trading Aussie dollar pair. We'll have to just wait it out. Let's see what's happening. In terms of the shorter term time frame, then on a 4 hourly chart, I think we've got wave 1 here, wave 2, this is wave 3, and then after that we get lost. So what we might have here is, if this is 3, then we've got a strange looking possible chart in that we could have this wave 4 as one possibility, is that we've got this one here as wave 4, and then we start this wave 5 to the downside, so we get wave 1. This is probably quite impulsive, ABC retracement and another impulsive wave down, and that's what making it difficult to actually line it up. So then I think we would have a running flat. We get a wave A, then we got A, B, C down as wave B, and wave C back up. So wave 4 comes here. So then subsequently we get a 5 wave move to the downside. So if we get 5 wave move to the downside from there, then we're in a bit of a problem here, because we get 1, 2, 3, 4 and 5 wave 5 finished, you see. So that wave is okay if 5 wave done. So we expect ABC retracement. So in ABC retracement, I think this is wave A, this is wave B, and this one is wave C. So this is very difficult kind of a wave normally to, it's like an expanding, you know. So if that's the case, then I think this is wave A, we are going into a triangle as a wave B, and out of that we see another thrust up before completing this. So we would finish up with this. We got 5 wave down to this one here. So whatever it is, we can call that one a larger degree wave A or wave W or something like that. So we'll call that one, say in bracket wave double bracket wave A. Oh, wave A, and then we would do this one as A, B and C, and within a C we've got A here, this potential triangle as wave B, and then we'll go up there as wave C, and that would then give us this wave B here. So as a very cautious expectation is, once once this is done, then we will see another leg down for wave C. So i.e. we'll see this one down. So this is I think the least bearish and highly probable is for Aussie dollar to drop down to this falling trend line, I mean a rising trend line, coming into region about 99, 89.50 to 99 area approximately. It might, in this case, we may even get something like this, AB equals CD possibly. See, if we do that, and then we might get AB equals CD coming in, depending how high this other one go. So if we have this situation here, a bracket, that means Aussie and US dollar, broadly speaking, will remain stalemate. Okay, and then when the dollar index begins to come down, then the Aussie will make this thrust up, and then after that we would suspect that Aussie dollar will do the second leg down that we require. But it is very uncertain, and I think there's no real significant reason for trading that pair for the time being. So we would either want it to complete this triangle before we find a trade, or we get some confirmation of exactly what is happening with the price action there. So somewhat unclear with the Aussie pair. New Zealand dollar. Now in the same sort of way with the New Zealand dollar, you can see we've had a bottom here, we've gone up A, B and C to the upside, and that is one of the reasons why this chart looks very much similar to the chart we just looked at on the Aussie dollar, where we had A, B and C to give us capital A, B, C down, capital B, and then C over here is very clear, A, B and C, and that's why I think the Aussie dollar should also have the same kind of, you know, structure. So if this is A, B, C, then just like this one here, this one had a 1, 2, 3, 4, 5, so like a 5-wave move up to give us A. We go down as a wave B and then going up there as a wave C. So in the same way here we've got like a zigzag we're looking for. So here we've got potentially A, B and C, one zigzag, A, B and C down, a second zigzag, and then we see a leg up. And that's why both on this one and on Aussie pair I'm expecting a deeper retracement and then a leg up to complete what we are looking for. And in a worst case scenario, the actual final top is in, but somehow I think it's not really feasible, because this decline of the top doesn't look like a very clean 5-wave down. It is of some kind of a waves, but it definitely, it's not very clean, it's sort of quite overlapping. And then over here we've got like A, B and C. So if the top is in, then we'll have to come back later and say this W is not W, but it's actually 1, 2, 3, 4 and 5. So it's like an expanding flat like this one, like that. It looks more like parallel, but it's you know, like an expanding flat, really speaking. So then we would have this as a wave 1, then A, B and C back there is wave 2, and then we should be looking for a strong decline to the downside. But also if we don't have that, then I think this is the flat correction. So we have a wave A, then going back up is A, B, C zigzag, A, B, C zigzag down, and then up here we had an ending diagonal with a 5-wave. So overall we got zigzag down as wave A, B, C as a zigzag up there for wave B, and we should be coming down. So that way I'm expecting a fairly strong 5-wave move to the downside, and that's why on an Aussie pair I'm also expecting something similar. But on this one you can see that we have a RSI already confirming a clear break of any of these here, and it's been developing divergence for a long time on this weekly chart. See, so I think from that perspective we should be expecting a deeper retracement or deeper decline. The minimum decline, we needed to go back to this sort of level here, and you can see horizontally we've had an area where previously there was resistance, so we could have that area as potentially acting as a support. So ideally we needed to get back to something like 71, but maybe a bit deeper. And finally, if we were to draw a trend line here, then that's the only other saving grace, is that it doesn't actually come down all the way, but it finds a support on that rising trend line, in which case it only drops down to there. But then this one doesn't look like a triangle, like on Aussie it's got a bit more of a triangle. This one doesn't look like a triangle. So what has it got? I would struggle to tell you. The only other figment of imagination maybe is that we've got an ending diagonal. So we've got A, B, C, then we get a declining back to here, and then we go back up, and in which case like so. Okay, so then we would have this double zigzag in a sense of wave A, wave B, and then we've got A, B and C. But it looks, you can see it looks very strange. So I think both Aussie pair, New Zealand and New Zealand pair and Aussie pair in somewhat indecision, but we will see a clarity of that once we begin to see how the price is developing and what it does by the time it comes to this potential rising trend line as a possible support. Does it break through that one, and do we get a strong 5-way move down? So we will come back and revisit that, I think, but we will probably have some surprises in here. I think there is a lot of confusion in exactly what is happening. If there is a major decline, or rather expectation that the world economy is cooling off again, then I think the Aussie pair will probably be hit quite hard, and then Aussie government will try and do their own version of quantitative easing by maybe cutting down interest rate. And there are speculations that later on in the year they're expecting Aussie to cut the interest rate. So that sort of thing might line up in the sense that the Aussie will actually start weakening. So it might not even actually go back and retest the all-time high. Then New Zealand likewise will have the same problem. At the moment they're saying they're okay, they're happy with the exchange rate, but you never know at what stage they feel uncomfortable. So Aussie pair and New Zealand pair I think are less clear, so we'll spend less time on that in the future, but we will still keep an eye on it, because obviously we are planning to trade other Aussie pair currencies to see what's happening. Now this is the US dollar yen, and yesterday in the US dollar yen we were saying that we are going to get this move going up, and I think we've got quite a way to go for US dollar yen to finish its move. Okay, so over here I think, like most yen pairs, we've done a wave 3, we're coming down into wave 4, and we're going into this wave 5, and within that wave 5 it's strange the way it has happened. So we've got a couple of degrees of counts on here. So we've got wave 1, wave 2, and then effectively we're in a wave 3, and within that wave 3 we've got this minor 1, minor 2, then again a minor 1, minor 2 of the second degree, and this is the wave 3 of that. So you can imagine this has got quite a way to go. So we've formed the high, retrace, say we make another minor high, and then we pull back, then we do another minor high. So by then we will finish up with this wave 3 here, because here we have 1, wave 2, and then subsequently is wave 3. I'm going to put a line across there. So if I put that line here, and then while it remains above that line, it is potentially in that same wave, and that wave started from here. So we have an initial what they call a leading diagonal is a 1, 2, and then we have another 1, 2, 3, 4 and 5. So that will then complete wave 3. So we go 1, 2, 3, 4 and 5, and at that stage we'll finish with this wave 1, 2 and 3. So then we'll get another retracement, and then finally another swing higher. So by that time you can see I've got a dotted line that is probably coming into view here, where we will finish this with 5. This one is wave 4, and this pink line is coming to around about 98.50, and I'll show you where I've drawn that line from. If you look at why am I that the price all got? Okay, what I'm looking for is, you see over here we had a significant resistance from where the market sold off. Okay, now just above we have another line. That another line is almost at 101. that one is 101. Okay, if I do the fib ratio of this drop, then you can see where that one is coming in. So we have 50% is approximately here, and 50% often could be a very strong resistance as well. So one, we have 50% retracement. Secondly, when we look at the other way, then we have quite possibly some Fibonacci's lining up as well. So if I take these off here, 1.618, okay, so we go 161.8% retracement coming into where this pink line is approximately. So there's something there, and also from this pitchfork will be coming and bumping onto that. We might even do an overshoot. And there we will finish this 1, 2, 3, 4 and wave 5. So that 5 will become, this one will become wave 3 in bracket. So you can see from here is we had wave 1 in double bracket, wave 2 in double bracket, and then in this cycle we've got 1, 2, this will form 4, come down for wave, so this will come wave 3, then will come down for wave 4 here, and then wave 5 will go higher. If depending on what kind of retracement we get, it will obviously bring the price action a bit further out this way, and then we'll see a wave 5 maybe taking us to about 100, and 100 would be like a psychological number, and it is exactly at 50%. But if we score 50% on this cycle, on this one, then we'll drop down and we'll go back up. We could then probably go for this higher level, which is 61.8%, and that comes in at 105. So broadly speaking, US dollar yen is still going to continue higher, along with some reasonable retracements. For the time being, I think the intermediate top, although still a bit further away, but is not that far away. It is now almost coming into view. So maybe perhaps next week we could easily form a wave 3 top. And you know, my feeling is that if we form this wave 3 top, then the dollar probably will top at the same time, because whilst the dollar is strong, it's continuing, and you would see if the dollar makes a top and begin to weaken, you'll see that weakness seen in all US dollar pairs, and yen would be one of them, even though yen is weak. But over here it will be like, you know, grossly oversold yen, or yen, you know, showing extreme weakness, and in this particular case like an extreme overbought dollar yen. So we would then expect a retracement, and that retracement we are expecting will be quite a significant one compared with all the ones we've had over here. So I think next week we've got a further upside, and that's why I'm expecting dollar probably to form some kind of a top. And what might happen is the dollar will form a top against some of the stronger currencies first, and then the yen pair will form a top at a latter part, maybe after a couple of days or something. Okay, but you know, we can't do anything with this. This is still very difficult to time, and you can see in terms of waves of moving, it is just simply going up. An interesting thing also you might remember is last week I think it was, or a couple of weeks ago, where they had a major um, some kind of a forum where all the major governmental representatives and finance ministers, etc., met, and the Japanese finance minister, or then finance minister, or I'm not sure whether the one that has been recently installed, made a comment that they need to show extreme seriousness, and they need to send the signal to the world that they mean business. And what they meant in that is that they want to fund out inflation in Japan, which almost have disappeared. They've had a constant deflation all the way along. So they want to try and engender some degree of inflation there. And in doing that, they're prepared to go through whatever degree of quantitative easing to make that happen. And he said that we want to show that we are really serious, is that Nikkei index need to hit 13,000, and at that time it was somewhere closer to about 11,000. So 13,000 you're talking about on 11,000 is almost like 14-15% higher. And if you look at the maybe on this one, if you can see, we'll come back and check it on a yen pair, sorry, not a yen pair, but on a market review. See if you can get a chart on there of Japanese 225. Okay, so this is an overlay chart of Japanese 225, i.e. Nikkei index, and yen pair overlaid with each other. Okay, so you see on this one is that on this one you see in blue and red is basically Nikkei index, and Nikkei index has now so far reached 12,379 and it's got 13,000 up to here. So I think by the time it gets to 13,000 is quite a bit of run yet left, and I think that is going to be represented by the yen pair also going along with it. You can see a degree of correlation with it, so I think they're running in tandem together. So by the time we get to 13,000 on a Nikkei index, somewhere around here, and when they say 13,000, obviously market is not going to go exactly at 13,000. It might overshoot, i.e. see this swing here down. If I project it up, then 261% comes in at about 13,500. So it's quite possible that the dollar yen, Nikkei index can get there, and it is almost like in a vertical takeoff now, and the yen pair will continue higher. So from that perspective, what I'm trying to say is the yen pair has got a bit further to run, and we would dare not really short that. We will be asking for trouble for shorting it basically, and then when it is reached its extreme limit, got a wrong page, when we see it reach its extreme limit, we will find the confirmation of a top being formed, and we may then, because we are expecting a significant sell-off, and that significant sell-off will be, broadly speaking, like a whatever the distance it has risen up to the top, and it will do like 25 or 30% retracement. So then there will be some reasonable, and it will last for several weeks. If you look at this one where it's been going up, then potentially we could say, for example, it started going up, so it's taken like almost like a 5-6 month movement up, so you'll expect a couple of movements down, kind of an idea. Okay, but the yen pairs have got quite a way to go up there, so I wouldn't necessarily try and short the yen pair, on this cycle up, as I say, it could easily get up to this 99 or even 100. It is quite possible because of the vertical nature of the Nikkei index currently shooting up, and correlation between that and the US dollar yen. But with the US dollar yen, we may begin to slow down, even though the Nikkei index is still pumping up, because the dollar index itself is likely to come to a potential top. Okay, and one of the reasons why dollar index has been going up so strongly is because currencies like Canadian and yen and to some extent also pound has been relatively weak, and consequently the dollar index has gone into like a super drive to the upside. So those are the US dollar pairs, and a couple of other pairs just to round it up is that we have a Canadian pair. Canadian pair is this sideways motion here. We were expecting, where we had this top here, is that potentially in terms of wave count, if we are correct, is that this is 1, this is 2, then this was 3, and then all this here is some kind of a expanded flat. So we got ABC up as a wave B, and then ABC down as a wave C. So in other words, wave 3 and wave 4. And then with the dollar index continuing, we should see another leg up on dollar Canada. Maybe not a lot more, but I think there is still a further leg up on dollar Canada before dollar Canada then tops out. And at the moment, the commitment of traders report was suggesting that the Canadian dollars, they are still shorting, and the short interest is still increasing. Let me show you that quickly. Okay, so this is the commitment of traders report published today, but it is as at data on close of business on Tuesday of this week just gone, Tuesday. Okay, so you can see here 5th of March. Okay, so we are looking at Canadian dollar. Let me see if I find it. Okay, so Canadian dollar. So you can see what's happened on Canadian dollar is that there was the 39,000 contracts, 39,500 contract close of business on Tuesday, and that was reduced by 2,000. So in other words, the long position, people who were long, they had 39,000 contract, and that one was reduced by 2,600. So when they started week before, it was standing at something like 41,000, and it's dropped down. So the long position is reducing. And look at the short position. The short position on a Tuesday is 86,000, and that 86,000 was increased by 22,000, meaning that before, the week before, we only had something like a 64,000 contract, and 64,000 is now increased by 22. That's like a 30% increase in short, and that's why the Canadian dollar is not going to come down against the dollar. That's why Canadian dollar against the US dollar, the US dollar is still going to continue higher because of this, an expansion of short interest, and it would get to a point where it will act like a catalyst, whereby the pivot or the balance will change and swap over. And we were talking about Aussie dollar and things. I won't go into great details, but it was interesting when I was looking through this here, is that the Aussie dollar is somewhat mixed. You see, this is the Aussie dollar, and you can see the long interest was reduced, and there's not a big change in the short interest. So long position was reduced by 17,000 contract. Okay, that means that people who were long are bailing out, and that would cause Aussie dollar to come down, and that's why I'm expecting another retracement on Aussie dollar, because all these people who were long, they're going to bail out. Eventually they'll flip over and they'll get net short, but by that time Aussie dollar will have done its retracement it requires. Okay, and the same thing was for a couple of other pairs. So let's just go back now. So for as far as the US dollar CAD is concerned, I think that this here was a sideway action. So wave 3, wave 4, sideway action finished. Now we are looking for leg up. So if we find that this wave count is correct, then we'll be looking for a top probably in the region of this area here, 1.04 to 1.0450. And if you look at it a longer term, then you can see that 1.04 almost comes into here, which is like nearly 100% retracement. On the RSI, we do have qualifying potential divergence on daily as well as on 4-hour, just like the dollar index. But I think it's just this final leg up that would synchronize with the dollar index topping as well. So maybe another few more weeks, few more days rather of price action to the upside would probably complete that. The other one was the pound. Now the pound, I think it is, when you're looking at this daily or weekly chart obviously out of question. When you look at daily chart and you're looking for potential bottom in a pair that often does 100 or plus pips in a day, if you're a couple of days out, 2-3 days out, it is possible that you might not get an exact level. However, see, what I'm looking for is, I'm still looking for, even if we are in a major downtrend, we are just far too late to actually short. So it is best to wait for a retracement and then look for potential short entry. But I think we are still, because if the dollar tops out, then the pound will find some courage from somewhere and it will start running up. So just looking at this chart is that we had this leg up, and if I put fibs on there, then currently the 78% fibs comes into level where the price is now. And then you know about this downtrending channel in the red that I've done, connecting this high here back in April 2011, and then this high here at December 2012, and that actually produced a parallel line applied to this low and this low, and we are in that price action now. So we got a Fibonacci retracement and price action, and we've got a couple of other Fibonacci projections, i.e. if you take this swing, which is the low of June last year, and then this high of this year, then the 127% comes in at this area where we have gone just below that, and the next level is 138%, and that comes in around 148.50 area. So even if we do have a bit more downside action, we are, I think, getting very, very close to a bottom and then overall turn, and we've got few more other Fibonacci's coming into there. And I'm going to quickly show you few other points of interest. For example, if you look at all of this here, see, from this high to this high is 182 days altogether. So if I now look at this low and the current low, we've got 200, so it's almost full. We've gone way past where we should be. Okay, the similar, I'm just doing approximate measurements. Okay, so from here to this low is nearly 200 days. So that is a low we had here back in December 2010 to this low is 202 days, 203 days. So we are in this one, we are very, very similar. This one here is very similar, 202, 203 days. Okay, then if you do this high to this high is 261 days. So 261 days, and in the same way from here to here is 300. That one is a little bit out of the range. There were quite a few symmetries that were lining up. So from there to there is 260, we were saying. So looking at it from here to there, here to there is 170. So Fibonacci wise, that would be like 2/3. From here to the top is 156. So this here to the top is 156, and from there to there is 350, so it's like a 50%. So you'll see that we've got quite a few swings here that are combinations of 150, 200, and this longer one that we talked about. This is 270, for example, here. So that 270 is very similar to this one here, 200. That one is 300, so that 300 then lines in with this 300 we're talking about almost. So I think we're coming to an area where we should be potentially looking for a bottom. If we just look at this one, is 155 days, and then from there to here is 50 days, so that's like a 30%. So 155 to this one is 30%. So there's not a set formula, but I think we are approximately in a place looking at the various ways. And then more importantly is that fib and the trend line, and then on the RSIs you compare with this low and this low. So here we have a potential divergence on the daily chart between these two lows here, and it's basically we're looking for this area to actually show RSI curling up. And if an RSI started curling up in that area, then potentially we have a bottom in that area. That bottom can be just an intermediate bottom, even if it's not the significant bottom. So that's what I'm looking for. And then in terms of the bounce, we're expecting that bounce to at least go back up. So this would be the minimum area, 152, but more likely to probably go up. And if the dollar tops out, then I think then the pound will do a much deeper run. And even though we are not actually going to find a possible long entry on this pound dollar pair, although that may be possible soon, but we are using, if the pound can stabilize, we can see an entry in other pairs line up. And that's the reason why we are looking at that, like Canadian, or pound New Zealand, or pound euro. And then this is the final pair, the euro USD. So the euro USD, it depends on what the dollar index does. Now if the dollar index got a bit more downside left, then maybe on here we might have something similar. But again, in terms of some price symmetry, in terms of time symmetry rather, time symmetry is from here to the current low we've come is 81 days. If you look at it from here to there is 85 days. So again we are in the time frame wise in the ballpark figure where we should be looking for. If you look at it from there to this high is 244 days. So if I look at it from there to here is 165 days. So that one's not lined up. I think it's the other one. If I do it from yes, if from here to there is 166 days, and then in the same way from here to here is 160 days. You see, so I think we are in the region. Plus we have this trend line that we've plotted as a potential support line coming in. We also have a potential making of a divergence, not completely there, but you can see almost had a double bottom, and then the price actually gone up today. So if we do another price movement, another day or so of sell-off maybe, then we will see RSI forming potential divergence on the daily. So all of those things are telling me that we are potentially there. The other one is this. See this triple zigzag to form a wave A. If I project it from there, then I'm getting 141 coming into that area. So 100 is just a bit further up. I think I need to put an additional percentage in there, so it's 1.272. 102.72. You see, so that one comes in at 129, and then at 129 we've also got an area that previously was a support, and we're talking about a region rather than a specific level. Trend line coming in, and then there is another trend line which I haven't put, but see, if you were to connect this up, so this is using alternate pivot. So if you're using this high we had in 2012, and then this, you know, close together, so like a high on October, then we have that coming in, and it comes in just a little bit below where the price is now. So those things are giving me a possible entry, not an entry but a possible area, or area of confluence. See, we got another one that you can also apply from the bottom, and that comes in. So there are several different intersecting lines, plus the Fibonacci, plus the potential divergence coming up, and you know, price action suggesting that maybe we might be coming to an end. And what we've done here so far, it looks to me that this here is a leading diagonal. So that leading diagonal means that there will be another leg to follow, and in that another leg to follow, I think what we've got is we've got this triple zigzag to wave A, wave B, and then over here we've got effectively wave A, wave B, and wave C. But in that wave C we've got 1, 2, 3, 4, 5 to give us a wave A, or W, X, and we are coming down from next leg down. So on this next leg down, just like the dollar has a bit more action to the upside, euro could be weak initially next week, and in this one we may be looking for something like, I know we're getting it far too many lines here, but basically the down leg we had today, we might expect a little bit of retracement and then maybe another leg down, and approximately 129 I think is a key area, and then on the dollar index 83.20 is a key level, and if those levels are breached, then of course, then I think the euro is going down a bit longer. But interesting also is in this commitment of traders report under the euro, we've got an interesting thing showing up. Okay, it would be good if they had little tab, the way you just simply put a tabs in. So we have Russian, Canadian, Swiss, Mexican, British pound, Japanese, euro. Okay, so in euro is on Tuesday they finished up with 63,000 contract long, but they've reduced it by 11,000, so that's a reduction. So it would have been something like a 74 or so. They've reduced it by nearly like 12%, but that is also a reduction of another 12% from the week before. So the longs are liquidating, and then in terms of a short, that was 84 contract, 4,000 contract is now 89,000. They've gone up by 5,000 contract. So now the shorts are loading up and the longs are liquidating. So we'll get to a point where the longs will just throw the towel in completely, and I don't know exactly what level that might happen, but it's possible. 129 I think is a key area. So I am expecting a potential a support in this region where 129 could be potentially an important date if we don't already have a bottom in. You see, if we already don't have a bottom in, if we're going to get this 5 wave down as W, X, and then Y, then this one here might be ABC. And when you get a very sharp move without really hardly any retrace along the way, it makes it very difficult to actually put a wave counts on. So on here, like on a 15-minute chart, is this first drop could be wave 1, 2, 3, all of this may be 4, and then maybe wave 5. But it looks very disproportionate because this wave 4 becomes so large compared with everything else. So sometimes you begin to wonder whether it is actually part of that, or is it just now acting like a connecting wave and then get another leg down. But bit more weakness I think on this one, bit more strength on a dollar. So that's where we are at the moment. And in terms of the other currency pairs, which I'll just do a final check now, do a final check now on the other currency pairs, which is in the euro. And until we get a euro bottoming, the euro Aussie pair is not going to line up, because although we're moving in sideways, and we are close to everything, like a rising trend channel that we looked at as a potential support, this 100 period moving average coming into there. We also have on this daily potential break of a trend. If you do it here, if you do one which is a little bit less, then we'll be close to, and soon we will see this declining trend channel break to the upside. So I don't know exactly whether it would take another day or two or a few more days next week, but certainly we are getting close to a long being entered. And ideal thing would be is obviously not to miss too much, but equally not to sort of get in and then get chopped about by a couple of 100 pip movement here without really getting a momentum to the upside. But I think if you are able to get long anyway, to the very low end of this range, that would be, I think, good entry. And you'll have to keep your position small, so you keep a couple of 100 pips below as your initial stop, and then based on the price action, see where it's going. But I don't expect this trend channel to break seriously to the downside. So that's a euro. And in the same way, euro CAD is exactly the same. Euro CAD, you can see we were getting into tighter and tighter and tighter corner, and then today the Canadian pair got absolutely berserk. You can see what happened here. Look at the move we had today, and all of the trend lines and everything is completely ignored, and the Canadian pair seem to do that a lot anyway. So but we are still, broadly speaking, we are still in this congestion area. Even if these didn't work out, we're still in a congestion area here. So I'm still suspecting that a long entry could develop if anybody was looking for potential long entry on here, somewhere in this area. In fact, the level will probably be lower. So on this one here, it will be 100% extension. I do it there, and put an additional one on, like 0.786. Yeah, that one is taken out, so the next one will be 88. Okay, so 88. And then the rising trend line also, see this rising trend line also comes into play around there on the daily. So I think that trend line will be quite a bit away yet. Yeah, that one is quite a bit away yet, but potentially as the Canadian dollar begins remain weak, we might get another sort of retracement and another drive down, but this is to some extent just more guesswork than anything else, because when the price is like this, it's a bit difficult really to put any kind of wave zone or any kind of analysis on, other than that it is moving sideways. So while the trend to the upside not taken out, and whilst we remain broadly speaking below this level here, which previously sort of where the highs were, so if you remain below that, then the price will make down, and I think the ideal entry will probably be now closer to 132.80, 133 area. We had a spike here today, so basically retest of today's low or another minor lower low, that would be perhaps an entry for around there, probably get close to the rising trend line. 1-to-1 ratio in terms of this one here, if you do this one applied from there, we get 100% extension comes in at 132.40, 132.50 area. So I think that is where we'll probably get a long entry on euro. Okay, and then I'll leave the rest for covering that on a Monday. In the meantime, I wish you all have a wonderful weekend, and successful trading commencing next week. Don't know if there's any comments or questions immediately that I need to try and address. Otherwise, I'll be more than happy to address them in a session next week if you let me know by email or Skype as usual. So thank you for joining me, and have a wonderful weekend, and look forward to you joining me again on a Monday, where we will cover the British pound pairs. So I'll stop the recording here and post it out as usual.